One of the reoccurring themes in the Ontario government's introduction of auto insurance reform was the need to control claims costs. The Canadian auto insurance industry has seen costs rise dramatically, especially in the last 5 years. ILStv asked Barb Sulzenko-Laurie, IBC's Vice President of Policy, to provide some insight into what the costs were and what they are now.
About 20 years ago, the Quebec government, of course, they have a public auto system, so they were very interested in the fact that people with whiplash were receiving disability income and med rehab resources for very extended periods of time, and so they started the process of funding scientific research into this area. And so all of the research that started then and now has become a sort of worldwide effort has focused on activation of people, getting them back to work, not using passive therapies, and so on. But we see that in Ontario, things have gone the other way. And let me just use as an example, again, a few little statistics that I have here. Okay. So we bring in the reforms in 2003 from Bill 198, okay, and between 2004 and 2009, we see the med rehab costs rising by 91%. We see examination costs, okay, those are the assessments and examination costs, rising by 195%. We see all med rehab rising by 115.6%. And these are statistics that are not the insurance industry statistics, but rather are collected by the regulators of the insurance industry. The cost of bodily injury, tort compensation for injuries, and the no-fault accident benefits rose by, as I said earlier, more than 81% over the course of 5 years, and by 21% in the last year. Those are significant numbers, and people aren't getting that. We're spending a lot of money, okay, and it's not our money. It's the people who drive cars and pay insurance premiums. It's their money. Spending a lot of money, and people aren't getting any better. I mean, one of the reasons why these costs are going up is that a simple sprain and strain injury is being transformed into a chronic pain injury as a result of a lot of extended med rehab care. That's not getting better. I mean, on the contrary, it's making one's life miserable as far as I'm concerned.
So will these 41 changes help to control insurance costs and give consumers more choice? According to Barb, it's not an easy question to answer.
The devil's in the details on these ones, and I should add to that the devil's in the implementation. There's been pretty significant pressure from some of the stakeholders for example, there's a cap on how much anyone can pay for an assessment. There's a $2,000 cap. There's been enormous pressure that's been placed on the government by other parties than ourselves, to lift that cap, because they say that they can't provide complex assessments for $2,000. Unfortunately, there's around this sector, because again, there's so many resources there. There's developed a new industry that brokers assessment services. So there's a middleman that identifies the assessors for insurer-arranged assessments as well as for claimant-arranged assessments. And the brokers, the middlemen, are saying, well, we're getting squeezed out, at $2,000, so as a maximum that can be paid for assessments. so there's enormous pressure on the government to keep these brokers in business and to increase the limit on assessments. Okay, so there are other examples of some stakeholders that are trying to find ways of breaking out of the $3,500 limit for med rehab expenses for minor injuries, and for example, if there's a psychological condition that develops, that the question is does the limit apply, and so on. So we're not out of the woods yet. There's no question about that. I mean, we've got a nice set of reforms, but we also have a stakeholder community that's been used to making use of a very rich system, and whether they're going to make those adjustments or whether they're going to be able to find ways of continuing to keep these med rehab costs at, in our view, unsustainable levels is still an open question.